All right, good morning. Dan here with tradingology.com in the trading room for March 18th, a day after St. Patty's Day. So hopefully everyone got in a chance to potentially celebrate the big St. Patty's Day. We've heard mixed signals around some places being available, some not. So in this day and age, it's just happy if you're able to celebrate with some friends and family with St. Patty's rolling around. We'll get the ball rolling here shortly. As typical, we do have Dave joining us from the Strong Market team. So when Dave gets rolling in, we'll get him in here. Andre's here as one of our great members. So good morning, Andre. Great to see you. Let me know if there's any troubles hearing or seeing me. And we'll get the ball rolling here. We got we'll just hit a couple headlines before as Dave's getting in here. Let's see what we got shaking right now. CNBC's got S&P slipping from the record highs. Tech's getting slammed as we will definitely be talking about the 10-year because we see a major jump going on in the 10-year. So we'll be talking about some bond yields today, some repo activity. So stay tuned for that. CNN's got a lot of the talk about the recent bad news down in the southern half of the state with that shooting. That's a terrible story. So that's on their headlines. And yeah, bonds plunge, yields are up. Headlines for Bloomberg, and looks like they're talking about the New York governor quite a bit on there. And as we typically do watch on Thursdays, unemployment claims forecasting the 704. We still broke 750,000 new unemployment claims filed with 770,000. So yet another week of over 750,000 more new people filing unemployment all the time.
Yeah, good news, right?
Yeah, it's always good news, right? It makes the market go up when more people lose their jobs. So good morning, Dave. Good to see you.
Morning. I was joking in the Slack channel this morning about that number. Seems like it's always good news. Doesn't matter if it's good or bad, or if it's worse, then it's good.
Yeah, let's take a look. When that came out, we see exactly we had where's the time here? That one rolls out about 7:30 my time, isn't it?
Yeah, it's 8:30 Eastern, so 7:30 yours.
Yeah, so 7:30ish. That's right here. And yeah, market's going up right after that report. We see there's the big wicks and pushes up. More people are out of jobs, so let's raise asset prices. Apparently, that's the way they look at it.
Well, at least on the Dow, but the S&P 500 and it remained under pressure pretty well. It really didn't move up that high. When the number came out, it was down about 24 points, and it's still down about 25. Nasdaq complete reversal from yesterday. Holy cow! With these 10-year yields up to 1.7%. Yeah.
Big day yesterday in the NDX, and today, yep, we're going lower. I've been watching these. The Dow is still riding that EMA all the way up. It came down and touched yesterday and rocketed right up. And obviously, Fed Chairman Powell talking had a lot to do with that, where he once again got on the microphone and rallied the markets, as we see all the time, except for like one time recently where it went down when he was talking. So he came back and fixed it this time. But now on the NDX, we're starting to break these. So if we actually close below, and this is the only one, we are below that 50 moving average, which is a big sign. So if that continue back up, that's not good signs for tech.
Yeah, absolutely. Yeah, it doesn't look very good at all. Stays underneath there, we could get a lot more selling. Below that low, which is what, 12,200 something?
Yeah, 12,9 is right here. And then if we get down below here.
Yeah, the one before that, the big sell-off is like 12,2.
Yeah, there's where we might hit I think this is the 200.
Yeah, that's 11.8.
Yeah, that'd be a little bit of a support point, but that'd be the next big moment if we break through that, if we're to drop that low below 12, definitely. But we see on the daily charts here, herding is thinning. We had one bear orphan, as we see commonly here and there. Same thing on the NASDAQ. But the bullish herding is thinning on both indexes for the NASDAQ and the New York Stock Exchange here. Interestingly enough, when I was watching this during the day yesterday, this completely was wiped away prior to Powell speaking. There was no bullish herding. But then when he started to take the stage, it came right back, and it was at 4 at one point, and it closed the day with 3 columns filled in on the daily chart.
Yeah, that's pretty crazy. He didn't even say anything. And, I remember like last year, there was one person who did an emotional state commentary on Powell. They kind of read his face and read his emotions as he was speaking. And it was pretty interesting. I don't know if I can find that again or if they do it anymore, but it was really interesting. When I listened to him yesterday, I felt like he was frustrated. I think he felt a little frustrated. And he's got to be even more frustrated today because the 10-year yield is going up. And he said, no, interest rates are not going up.
Well, kind of looks like the yields are definitely increasing. You just mentioned the 1.6, and this is hitting a long-term trend line. Let's see if I can pull this guy back to where I drew this from. This is a major channel.
Oh, yeah.
This goes back to 2008, where some of these numbers came from. We were up above it a little bit in 2018, back when times were good, and then they started to attempt to tighten, and that didn't work so well. And then the 10-year yield dropped all the way down to below 0.5%, as everybody saw when the virus hit. And we've been steadily climbing up, and now we are right at it.
Yeah.
So interesting times now to watch as it's a big spike right up through it at the moment. And currently it's kind of holding. So we broke through a little while. We're up at 1.7. Now it's hovering at 1.737 to be exact.
Yeah, that's crazy. Yeah, up over 6%, which is a really big move for the 10-year. Wow.
Yeah, yields up. The only one that's down is the short term.
Yeah, well, the only real control they have is over the short term. They really don't have any control over the long-term rates. That's the market. But, if they try to step in and, try to buy up those long-term yields, that's operation twist. They can continue to keep those long rates lower. I don't know if they're not doing it, or maybe there's too much pressure to sell the long-term bonds and they can't keep up with it.
Well, look at the 3-year here. It's up 16% today.
Wow. You don't really look at the 3-year that often, but that's a big move.
It's starting to look like what happened back here in February, where there was up 50% in one day, where that one jumped. And this is one of the two that they can control more of the shorter terms versus the longer terms. And what do we got down here on the 30? The 30 years up 2% itself, breaking 2.5 for a little while there.
I don't know. Is this a trend that's going to last, or do you think this is kind of like a short-term little bounce back from being so low for so long?
I have a feeling this is going to last, but it's going to be I think it's not going to be the rocket ship up, right? That's the thing about the bond markets and the yields is they don't take, they're not the stock market. They don't take those massive jumps typically, except for when we see like this 50% move today. That's more the rare side. But yeah, in the longer term, I would think it's still going to be more of that stair step up is what I personally see happening.
Yeah, it looks like a trend that started last year. It's going to continue to go higher.
And comparing that with the Dixie, we were down yesterday when he was talking, and it's pretty much recovered everything what happened yesterday. We're back above almost at 92 again on the DXY here.
Yeah, that's kind of bullish for the dollar if it bounces back that quickly. So we'll see if that holds through the end of the day. But yeah.
So keeping an eye on those as always. And as you guys always know, we are typically watching the internals. So we're hovering in the negatives, but that's trending up right now. We opened up about a -1,000, give or take. But volume is really nothing. This is one thing I noticed too watching, as you guys have heard us call out over and over again. It's like beating a drum, but just to keep you in mind, when we had those moves happening, nothing was in sync, whether it was negative before Powell spoke or positive after he spoke, where there weren't real moves happening because we had major separation between the issues and the volume. So that's one thing to always keep your eye on. And we're still kind of like that today.
Yeah.
So I don't see this as a major move down for anything that's negative right now. We're trending back up. Volume's pretty flatlined. But one thing we can keep an eye on here, as you guys have known, is the warning bells. VXX trade systems above the upper bound, and the SPY VIX ratio is heading towards it. We're breaking in the 20 range. Today it's dropped just a little bit at 19.6, but it's a major move up in 14 days, not counting weekends or including weekends, I should say, where it's a huge spike up. If we get up to that 25, that's a major thing to be watching, because we're talking where the major downturns happen, right?
Yep. It used to be the upper boundary on that used to be 20 back in the early 2000s through mid 2000s. The upper bound was 20. We did hit over 25 in 2007 before the financial crisis, and then we hit 25. So we hit that 25 level. So the spread went from 20 to 25, and that precipitated, or just before the financial crisis. Yeah, if you go way back out there, let's take a look at that.
Yeah, so I pull up a weekly so we can go way back.
Yeah,
there's the GFC. where it broke above. This might be not trending properly because we see it below 10 at that point. I don't know if I've ever seen it down at 0.
No, that's not something they may have changed the
It's probably from the SPY rotation and all the changes, I bet.
Yeah.
Because that's inaccurate going back to that.
Yeah, no, that's inaccurate because in 07 it was over 25. 20 was pretty much the limit for a while, and it went over 25.
It's probably related to historical changes and who's been added and removed from the S&P, I bet, over time. Because when you watch, when it does get above that on the more recent numbers, that's when the major drops happen. So there's the early part of 2017 when we had those 2 big drops where it was 2 days over 4%, if I remember right, that year.
Yeah, that's right. We had 2 days. Yeah, we had 2 big days, 4% apart.
And then later that year, it came up and touched it again. And then nobody was talking about it.
Yeah.
But this little virus thing happened, and then that happened to coincide. I will use that word as far as if you want to look at cause and effect. But we were already at these levels when this happened, and then that was just the straw that broke the camel's back, and it just plunged it all the way down here. So we're approaching those levels once again, where we're 2/3 of the way there. If you call this, 1/3, 2/3, and then all the way. So if we get another spike up, we're keeping our eye on that to protect ourselves.
Well, there's also something interesting about that chart. Don't change it yet because there's a divergence being set up, right? So we've got higher stocks. If you take a look at the top in March of 2020 and take a trend line and bring it right up there to the top of where we are right now, and then take a line from the SPY VIX ratio. No, right at 2020, March of 2020. So right there, top of March of 2020.
Oh, up here, way up.
Way up there, and bring it right up. So we've got a upward trending line on stocks, but look what happened to the SPY VIX. It went down. So we've got a divergence. I don't think I haven't seen that, although it looks like there's one back in 2018 too. There's a divergence there. We went a little bit higher in the market. And then if you go back to 2007, the beginning of 2007, and draw that trend line, that's a little bit higher too. See right there at the top of that, right there in January, yep, and right up there, it's just a upward trending. My
mouse isn't agreeing with me.
That always messes you up when we're on the Zoom call. And then the SPY VIX hit a top there, and that looks like it's pretty high. What number was that? It's like 29 or something.
I'll squeeze it down and hover over. Yeah, 29.65.
Look at that. And then the sell-off right afterwards, and then we had a divergence, and we went down into that 2018, end of 2018. Wow. So we've got a pretty big divergence right now. I would love to see it back up at 25, so it's probably a better shorting opportunity. However, with that kind of a divergence, I'm not sure we're going to get there. We'll see.
Which leads us to start looking at other pieces on the weekly charts. Let me pop this back down and just pull up the VIX itself. I know you were mentioning this. You wanted to take a look at the weekly chart. So let me switch this guy over because we are jumping right back up here today.
Yeah, we've got kind of a new low here on the daily. If we take a look at the weekly, I want to see the huge spike that we had back in March. And
I'm going to turn off the function that I just love completely around is this one right here.
They keep expanding those. I don't know why. There should be a button, don't expand.
I don't know if it's something I'm doing or what.
I got the same problem. But you see, we had a pretty big spike in the VIX, right? And if you go back to 2008, we hit 89.53 there. And then we had a couple of little spikes, but we came down in a much more orderly manner in 2008, 2009, much more. Now we've got a bunch of spiky declines from the March 2020 peak. And, we're making higher highs here. We're not really breaking that 20 level. it just seems very, very odd to me. And I'm wondering, this is just something that I was thinking out loud last night, is that you know how typically a seismograph, just like I did in the volatility video, seismograph will start to move up. And then as you get closer to the earthquake, when the earthquake really hits, it jumps up, right? I'm wondering if this little spike in March of 2020 is just that little pre-seismic shift. And the real spike is going to exceed that by X amount.
Ooh.
So,
if it was like this pre-warning cursor.
Yes, exactly. So that is what we're seeing in March of 2020, and then we get the really big move. So it just occurred to me last night. I said, you know what? These spikes come just like earthquake movements, and they start off with a small move, and then they get bigger and bigger. And I'm wondering if the move we saw in March of 2020 is just the beginning of a much larger volatility move.
We'll circle that in case you guys can't see what we're talking there.
Yeah.
So is this activity in 07 the precursor that was basically the warning indicators for the major volatility coming?
Right. And then the big one we had in March of last year is the precursor for something else that's even bigger coming.
Yeah. Will we see triple digit VIX?
Ooh, 300. That would be crazy.
But yeah, we have never returned. Like you say, this was, I'll move this so I can actually touch it again. We'll zoom back in on this guy. So once it peaked there, what week was that? That was October 20th. Had a little volatility coming down where it dropped down to 44, rebounded back up to 80. So that was within a few weeks. But then we see down, then it peaked to only 50. But then we started, you can see it here. It's just calmly, we're coming down until it finally hit 2009, where it actually hit 15 almost here.
Yeah, and that's almost the exact, well, no, that's 2010 right there. But even after it peaked in October, November of 2008, the market continued to go lower January, February, and March of that year. And we didn't actually hit a bottom until March of 2009, which is still a kind of a high level on the VIX.
So we compare that with the past year, and it's not been, we've had multiple where there wasn't even the real close one, if you look at it that way, right? Because they completely manipulated it more, whereas major peak, but then it slammed all the way back down. There was no jump after 2 weeks like we saw back in 08, 09.
No, not really, not right away, but then we just kind of
not for a quarter, not for 3 months later, it had a little bounce.
Yeah. And then it's bounced almost every couple months. We keep getting these bounces.
It's definitely not doing if you look at it overall, but it's not the same. So could this, what if, that's crazy to even think about if this is a precursor for another one. Because we all know that everyone, basically all they're doing is just continuing to kick the can down the road.
Yeah.
It's the same story every time where it's the worst the next time.
Yeah. And so the kind of the thinking that I had was that, wow, what if that's a precursor to something much, much larger coming? That's pretty, that'd be crazy, right?
Yeah, that's a little scary.
Yeah. But we're not bouncing much here, at least on the S&P 500. There must be one stock in the Dow that's kind of driving this Dow higher. I'm not sure which stock that is. Anybody know?
Yeah, did anybody recently report?
Is it Boeing or something? Usually Boeing. Good morning, Andre. Morning, Steven. Kyle, we're almost done here, but oh, there's one other thing too. Is there's a reverse repo in the news. Was reverse. I get the Federal Reserve updates in my email, and I saw this last night, and I'm scratching my head a little bit trying to figure out what's going on here. But a reverse repo agreement is basically where instead of the banks, the Federal Reserve Bank, selling treasuries to the Fed will loan out securities that they own, the treasuries, to the banks to meet liquidity ratios or to balance their balance sheets or whatever they need. They need some security on hand in order to offset the liabilities of large deposits. And we talked about this Tuesday, that there's large deposits coming into the banks and because of the stimulus checks. And a lot of the banks have held it up until the 17th. Well, look at this. On the 18th, it says the Federal Reserve Bank in New York will conduct overnight reverse repo agreement operations with a per counterparty limit of $80 billion per day, effective March 18th, which is starting this morning when the banks open, from a current level of $30 billion per day. So the maximum was $30 billion and went to $80 billion, which is a 2.5x, 2.7x times, almost 3 times as much. And I gotta believe it's because of the fact that maybe they're not going to continue the SLR.
And you can track this, which we talked about here and there, where we started to see more reverse repo activity recently. There isn't the standard, so I'll grab this link and throw it in the Zoom chat for you guys so you have it for your reference in case you don't. We know I do have it in the members area because we're always tracking the repo stuff where you can see that there is not anything happening. So this is yesterday. There was no repo activity, no reverse repo. But the day before, there was 700 million. So they're upping what they're going to do here. So it's going to be interesting to watch this tomorrow when they report on today, because we have seen small reverse repo activity and what they've done. And they've said, oh, so here you go, 6.8 billion. Is that? Yeah. So that's 80 billion a day.
80 billion a day. Yeah.
Wow.
Yeah.
So we'll watch this 6.8 number go to 80.
So I'm thinking that 80 billion per day is liquidity that the banks will need. Why?
I'm curious if this is going to end up being like the Fred charts and they'll suddenly say this, we're no longer reporting this and it's discontinued.
yeah, maybe. But why would they increase the reverse repo unless banks are desperate for securities?
Yeah, they don't do it for no reason. It's not just like some whim, right? There's underlying cause and effect going on there.
Absolutely. And the timing of it starting this morning after all the stimulus checks went out yesterday.
And it was interesting how during the speech yesterday, someone brought up the question of SLR and he said, I'm not going to answer that right now. We'll address that in a couple of days.
Oh, yeah, that's right.
So the whole timing of everything is just really weird. It's like, all right, let's wait. Then this comes out right after. So maybe he's going to talk about what this announcement was in his next one. And he wasn't ready to let it out yesterday. I don't know.
Yeah, he didn't talk about this at all.
No, he just literally.
I didn't hear it. I didn't see any news pick that up at all.
Yeah, he pushed it right off. It was, no, I'm not going to talk about that. Do you have another question? She's like, yeah, how about this?
Yeah.
It's a good thing she had another one queued up for herself.
Yeah, I don't know. I just had a feeling he was kind of frustrated yesterday. I just don't think he's not his usual cheerful self.
Well, it's almost like a super broken record because it's always we have tools and there's no inflation, even though gas is continuing to go up or getting close to $3 a gallon in this part of the world. So things are getting more expensive, but they claim there's no inflation and everyone's calling BS on it. So I think that's part of what's rattling his cage in my perception. That was fun. I was sitting there talking to some like, oh, Dave froze. I'm like, wait, no, I just lost my entire internet.
Steven says, yeah, I hear you.
Well, you guys work, but suddenly I stopped working.
Yeah.
We'll edit that in post-production.
Anyway, guys, we have probably, I don't know. It's so hard to tell with this market what's going on right now. I remember back in 1999, 2000, at the top of the dot-com bubble, the markets were absolutely going crazy, just kind of like the way they are right now. Very, very poor internals. Market continued to ramp higher. Lots of divergences, especially I'm looking at that SPY VIX divergence. You know, it's just a very, very odd market. Just be cautious. I think that, you know, the market could go higher a little bit. I'm looking at S&P 4,000 as a potential target, 33,300 on the Dow. But I don't know if we're going to get there. We'll see.
I'll just leave you with this little teaser on where I think it's obviously going to go next. As we've been talking a little bit about this offline, but I'll do a whole video on it for you guys. As I've put what I've been using for years with it's kind of a little custom fib with 2 extra ones where everything else is standard fib. I see the Dow going to 33,306 here is like a good exit, because actually the 618 fib is 33,340, and we're real close to that. We're only 200 points away. That's off this is off a daily chart. So I don't trade a daily chart, as you guys know, but this is going back quite a ways, and that's where I see this going. So I might look for a little bounce from there, which is also lining up with the days. So I'll put together fibs, or we'll talk about fibs one day, or if you guys got questions on it, I definitely want to cover that with you guys and the members, and just how I do this and how it's pretty amazing on calling where turns are going to be and whatnot.
That's cool. I'm really interested in the -0.18 and the -0.27. You explained it to me, but I still don't get it.
We'll put it all together for you. So put that down on your calendars: 33,340 and 40 cents.
Okay.
That's
yep, I got that. I got the 3,300 on my calendar next on my charts. And actually, if you look at, I think I brought up on Tuesday that long-term trend line going all the way back to 1929. That crosses at 3,386. So there's a convergence there between your fib and the 3,386.
Exactly. That's definitely to keep an eye on.
Yep. Very interesting.
33,340, 33,386. They're within $40.
Wow.
And there's that long-term trend line from 1929.
Yep. Absolutely crazy. And with that, we are at the top of the hour. Just be cautious there, guys. You know, no financial advice here, but I think we're at really, really high risk territory.
Be on the alert. Keep your eye on those indicators. And any questions, as always, let us know. And I'm probably going to send out a little survey too, an email. So look for that in the next coming week or so. I got some questions for you guys. See what you're getting, what you need.
Awesome.
All right, Dave. As always, we appreciate you, and I hope you have a great weekend. Good weather's coming. We got 60s on the way, so
thank you.
For nice weather.
I appreciate that update, Dan, because today's raining. It's terrible outside.
So all right, it's going to be short-term terrible.
Yeah, thank you. All right, Dan. Everybody have a great day and weekend, and we'll see you on Tuesday.
Andre's checking on the fib. I don't think that's the exact day, but stay tuned, Andre. I might do just a separate video and put it in the members area, but it will definitely be there. So we'll catch you guys next week.
Sweet. Take care.